ad revenue for Tencent growth very disappointing. And to what extent is ByteDance taking a bite out of Tencent here, and is that the only factor?
Right. Tencent's advertising revenue disappoint in the second quarter. It further decelerated to 16% year-on-year growth. It actually is due to a couple of the factors. One is the weak demand because of the macro slowdown, and second is because of the increased ad inventory in the market, especially from the short video app, which is ByteDance Douyin. And third is high base of last year's because of the World Cup in June, July last year's. And fourth is because of the delay in terms of the video content launch due to the government approval delayed due to the 17th anniversary of the Republic of China this year. So it's due to multiple factors to lead to the slowdown. We're likely to see the slow growth persist in the second half of this year. Nothing is going to change, but Tencent is going to mitigate the impact by increasing ad inventory on their WeChat, which is a very unique property. The pricing is very resilient. They're adding a number 3 ad there. And so if you look at the social advertising growth, actually is still quite strong, 28% year-on-year. The good thing about that is that the margin for this social advertising is very high. So if you look at the gross profit for the advertising, it's still growing 50% year-on-year. So we don't think that is that's a short-term pressure because of the macro, but it's not going to have a big impact in terms of the earnings.
Yeah, in terms of the margins, I just want to bring up this interesting chart on the Bloomberg that illustrates some of the unique problems facing Tencent. The company is like 300 times bigger than it was 15 years ago, but as it's grown, its margins have begun to fall. Its sales growth is falling as well. Is this sort of the law of diminishing returns for Tencent? Has it spread itself a bit thinly?
Right. If you look at the margin is declining, it's mainly because of the mix change of the revenue mix. The new business, such as fintech business, cloud business, which are not making money right now, and that's why the margin is in decline. But those businesses now already account for about 25% of their total revenue. Both business in the long run is going to be huge, and it's going to be profitable with 25% margin in the long run. So the two businesses combined, you can consider is $100 billion valuation for these two businesses, which is 25% of their market cap. So if you just look at the margin or PE, you may undervalue the company.
It was really interesting to see, though, that Tencent was really holding its own against Jack Ma's Ant Financial, despite the fact that fintech is a pretty young division for them.
Yes, if you think back, is that Tencent online payment business actually is lagging compared to Alipay when we are on the PC world. But when we go to the mobile world, things change. Tencent actually take the first moves to go offline. They invest in a couple of the O2O business, including Meituan, Didi, as well as the Mobike, in order to hook up all the transportation usage for their mobile payment services. They're also using the merchant acquirer to sign up offline merchant to use the mobile payment. They also issue paper QR code to link up the long-tail merchants like wet market or hawker onto their mobile payment services. Their offline payment transaction actually growing a lot faster compared to Alipay, which is 6 months ahead of Alipay. And the huge success of their mini program further fueled the growth of their mobile payment services. Now, by volume, they probably has 55% of the mobile payment market right now. By value, it could be 40% because they're smaller. But both Baba and Tencent now is capturing 90% of the mobile payment services in China, and that is about 30–40% of the total payment market in China.